Today's video is all about protecting your investments. Trump's tariff wars have had enormous global impact. And today's video, we're going to get into exactly what has happened, how that is impacting the world globally, how to make sure you're protecting your investments, and most importantly, succeed financially. So firstly, what has Trump actually done? He has insanely hiked the tariffs between the US and most overseas countries. And he's done this in a big way, in a very dramatic way. And essentially what he's done is made it much more expensive to import goods into the US. So let's explain what actually is a tariff. So, because most people don't quite understand this. Well, what actually is a tariff? So a tariff is essentially the cost for a company outside of the US when they're exporting it, when they're selling that product to the US, it's going to cost a lot more money. So it's actually the companies from other countries that have to pay this. It isn't the country or the governments in other countries that are paying this. And what does it result in? It results in essentially Americans paying higher prices. And so therefore, as a result, it's making other companies not be able to sell as much because these products are going to be higher. Maybe they have to cut costs, but ultimately the American people are going to be most hurt by these increases. Okay. Now, why has he done this? Well, he's not stupid. A lot of people say he's stupid, and maybe a lot of the way he is doing this, it makes it look like that he's stupid, but be under no illusion. Trump is a very smart guy, and there is good reason for why he's done this. In the US at the moment, globally, there is more craziness going on. There is more global unrest, more kind of wars, both internally and externally. And this isn't just with the US. Many countries are seeing this in Europe and elsewhere. And the reason for this is protectionism. By doing this, it means that companies within the US are able to compete more effectively, because there's lots of ways countries essentially make it easier, more cost effective, more profitable for companies within their country to sell globally. It isn't just through tariffs. Subsidies is a really good example. And so Trump is essentially arguing that through all of these mechanisms, they're essentially subsidizing these companies to sell to the US to make money, to prosper those countries. Now, the trouble with this is that if you get into a war with China or any other country, you are reliant on buying stuff from these other countries. And so Trump is very aware of this, and he is wanting to protect against this. So by doing this, he's making it so that American companies have a much more competitive advantage, can sell to the American people at a price much cheaper, and so therefore will explode, in theory, the companies within the US. It'll also encourage overseas companies to invest in the US, set up businesses in the US to sell within the US. Now, who knows whether this will work, but that is certainly the reason for it. So the next question is, should you be worried? And before I answer that, why listen to me? Well, I've got over 7 figures in wealth, in revenue, I have over 30 properties. I'm invested in most asset classes. I got my first million in just 6 years. I studied economics. I'm an economics graduate. I certified as an accountant. And so, I'm coming here from experience and real lived experience. And the big question really is then, what do you do about this? This is all going on. What do you do with your investments? Do you change them? Do you change how you're investing in the future? Well, let's get into it. The short answer as to whether you should be worried is a yes and a no. So yes, in that there is a lot of craziness going on at the moment. It isn't just the Trump tariffs. Lots of things like this keep happening. There are increasing amounts of wars, internal conflict. We've seen this in the UK, in the US, other parts of Europe, and elsewhere globally. So the question is, why are we seeing this? Why are we seeing all this global instability? Why are we seeing these wars externally and within countries? Why are we seeing so much conflict? Well, it's all around this long-term debt cycle. If you don't know what that is, I really encourage you to check out more of Ray Dalio's stuff. He talks about it extensively. But essentially, a long-term debt cycle is like a very big version of the short-term business cycle, which most people know. Between 5 to 7 years, we have these booms and busts within the business cycle, okay? The long-term debt cycle happens more on around a kind of 50 to 100-year basis. Now, the problem with this is it's such a long period of time. By the time it comes around to the next one, the people that are around in the previous one are dead or have forgotten about it. So it's all important to understand where we are in this cycle and what that means for us. When we come towards the end of a long-term debt cycle, you get increasing conflict. And the reason for this is because there is more increasing strain on governments to try and navigate situations, and not just governments, but also businesses. Every time you go through a short-term business cycle, you have increasing amounts of debt and credit available. As we go into booms, then we go into a bust or a recession, you get the opposite. You get a contraction of credit and available money. And this really affects the economy. But every time we go through one of these cycles, the level of debt available keeps increasing. And as we move through the long-term debt cycle, the amount of debt available that is used gets exponentially higher. And that is why we're seeing so many countries spend insane amounts of money just to stay afloat. The UK, the US, and many other countries are spending enormous amounts of money each year. It has gotten so big that tax really becomes a very small portion of what they're actually spending. And they get stuck in a situation where the only way to keep going is to keep spending more money. Now, the trouble with this is it inevitably gets to a point where it is unsustainable and it all comes crashing down. And essentially what we have is an unraveling of this debt. Now, we aren't there yet, but we're starting to come close to this point. And lots of countries around the world are taking more and more drastic measures to protect against this and to be in a more careful position. And Trump's tariffs are one of those ways this is happening. So there's two main things you need to be mindful of. The first one is that you're going to get much bigger volatility in asset prices. You know, what we've seen with the Trump tariff wars is that the stock market has dropped considerably and many other assets. But if you think about before the Trump's tariff wars, the stock market and many other assets did extremely well. One of the reasons is this money printing. When all of this printing of money goes into the economy, yes, it might go into people and they're spending more and feel better, but ultimately that money ends somewhere and it always ends in assets. And that's why even though we've seen high inflation recently, we've seen much higher asset price inflation. And one of the biggest issues with this big increase in asset price inflation is we get this widening of a wealth gap. We get people who own those assets that benefit from this and the people that don't have those assets and are being priced increasingly out of those assets. This is why so many people are complaining about the property market not being able to get on the ladder. So one of the first things to be mindful of is you're going to see these big changes in asset prices. And so you need to be protected against that. You need to be navigating that. You need to be aware and be able to cope with these big changes. Take advantage of the upswings, but also be invested in a way where you are protected against those downsides. And one of the best ways we can do this is through diversification. The second thing is about as we come closer to this long-term debt cycle, well, at some point when that debt unravels, there's going to be a huge contraction of credit. And that's essentially the ability to borrow money. When this happens, there's way less money in the economy. And one of the biggest things that happens around that is asset prices drop enormously. When this happens, it's going to feel very painful. A lot of people are going to lose their jobs. Governments are going to take extreme measures to protect their economy, protect their countries. And you will be shocked at the kinds of things that countries will be willing to do to be able to try and navigate that. When you go back to, say, the 30s and the 40s, when we last had an end of a long-term debt cycle, it was extremely painful. We had situations where money was seized from people. Printing got so crazy that essentially money became devalued to nothing. You were restricted from owning certain assets. Taxes went crazy through the roof, and there was a huge exchange of money, taking money essentially from the people who have it to those that don't. Now, this video is not about whether that's right or wrong. This video is all about how do we navigate this situation and make sure, one, we don't get screwed over, and secondly, how do we make the most of this situation? So like I mentioned before, one of the most important things you can do during this crazy times is to be diversified. There's going to be times when each asset class goes through a huge drop in value. And so you want to be invested in multiple different assets. So that's stocks, bonds, crypto, gold, commodities, property, and so on. The more things you're invested in, the more diversified you are. So if one area drops, you're a lot less likely to be hit overall. Yes, there are times when lots of different assets go down, but when that happens, there's no place to hide, because even if you invest, even if you hold your money in cash, if we go through a period where it's really high inflation, your money is going to get eroded even through that way. But it's not just about investing in different asset classes. It's also about being diversified within each asset class. So don't just be investing in one or two companies, be invested in lots of different companies. And you can do that by owning index funds. By investing in, say, the S&P 500, you're owning the biggest 500 companies in America. But you don't need to just stop in America. One of the other ways to protect yourself is to diversify across different countries. So by investing in, say, an all-world index or all-developed world index, or even investing in emerging markets as well, we can protect against certain countries not doing well. If America doesn't end up doing well off the back of these tariff wars, but other countries do, but if you are just invested in America, that is going to hurt you a lot more. Other ways you can diversify is through currency, because yes, you might be invested in lots of different countries, but if all your assets are denominated in your currency itself and your currency devalues against other currencies, that is also going to hurt you. So just because you're invested in, say, the US and you're living in the UK, that doesn't necessarily mean you're protected by the pound devaluing against the dollar. You also need to make sure your investments are denominated in other currencies. And then the last one is time. Be diversified across time. Okay, so yes, the stock market has gone down substantially recently, but if you continue to invest over the long run each month, then even if you're investing in a point which then ultimately goes down, that is going to be a lot more manageable, because sometimes you're investing now, then you're going to be next month, next month, next month. And as we go through these volatile periods, you're investing at different points in the market. The next one is try to minimize how much money you have invested in cash or short-term bonds. Now, the reason is because during this period of the cycle, inflation is very high and it continues to be high for a sustained period of time. Yes, inflation has gone down recently, but the reality is we are going to probably see periods of high inflation again and again over the coming years. And so if you own money in cash or bonds, then you are most affected by this. Now, that's not to say not have any money in cash or short-term bonds, because if all your money is locked in investments and it all goes down, you don't want to be selling those at a loss. So always make sure you have a safety fund that covers your cost of living for a good few months, because who knows what happens, right? The next one is around mitigating protectionism. As we come to the end of this long-term debt cycle, one of the biggest things you need to be mindful of is governments taking more and more severe action to protect against the situation we're in. Now, Obviously, Trump has just brought out these tariffs really high. That could cause massive impacts to both the US, but also other countries. And as this becomes more and more drastic, don't be shocked to see things like you can't own certain assets like gold or crypto, taxes going really high, wealth taxes. You could see seizures of your money, lots of things like this. And so during this time, you need to be on the pulse around what governments are doing, what are they planning, and making sure how you are invested is protected against these things happening. And also, where are you based? Who has control over your assets? Are you in a country that you feel is going to be lenient around these times, or do you feel you're in a country that are going to be harsher and more strict around these things? Because the more you're able to be free location-wise, being able to base yourself in other jurisdictions, from a tax perspective, from a residency perspective, where you have your assets invested, where are those companies, who has access to that? These things will become increasingly more important to be mindful of, because if you're stuck in a country that is in a really bad situation, you could find yourself losing a lot of those assets. And then the last one is around what I call your attack vehicle. So all your investments that are diversified, this is kind of like your defense. These are the foundations that help you weather storms. But your attack vehicle is your main area you're making money. That might be your business, that might be your job, that might be the main area that you're actively invested in, that you're making decisions, you're working and getting better returns. What do you think could happen in the future based on the Trump tariff wars, based on going into another recession, a country printing a huge amount of money and going through really high inflation? What is going to happen to your attack vehicle, and how do you protect against that? So if you're in a job, what if you lose your job? What happens? What are you going to do? Do you have the ability and the skills to find another job? Do you have the ability to move country if that's something you need to do? With AI and technology coming, are you protected against that? Is AI going to take your job, or is it going to actually help you in your job? These are the kinds of things you need to be thinking about, so that even if something happens in the future, you can change things up. And then the last thing I want to talk about is, well, why do you not need to worry? Well, if you're invested in the right way, then you can absolutely be able to not worry about these things. Now, this is one of the things that I feel is really, really important to how to approach your situation. In fact, when the whole tariff wars came up, it didn't really impact me that much. And why? Well, because I am invested in lots of different things. My main vehicle is property, but I'm also invested in the stock market, crypto, gold, commodities, and many other things. And so, yes, the stock market dropped considerably, but my property investments still held really well and actually were going up in value. I had money in gold, I had money in commodities, I had money in crypto that, yes, went down, but nowhere near as much as the stock market. And those assets I didn't need to be using to be spending. And so therefore, as a result, even though the stock market dropped, it didn't actually impact me in a practical sense. And because everything wasn't in the stock market, it meant that I was okay. It meant that I still had other things that I was invested in that I could focus on, could see were doing well, and not worry so much. Okay. So the key here is really be invested in a way where when things like this happen, like the tariff wars, it isn't such a big deal for you. One, because you understand economics, you understand how these things happen, why they're happening, that these things will always happen. There'll always be these big changes happening, some small, some big. We're going into an environment where these things are going to happen more and more. Things are going to be moving in a more volatile way with assets. And so therefore, it's just another one of those, you're not kind of shocked or scared. You understand this is just the reality of where we are. Two, you're diversified across lots of different assets. So even if we're in a situation where one or two of your assets are going down, other areas are also doing well. Thirdly, your attack vehicle where you're making your money is done in a way where even if something happens and you've got to change things up, you have the ability to do that. You can move to another company. You can shift your business into something else. You can take advantage of the opportunities like AI. Rather than be hurt by that, you can actually do better from it. And if you follow this, then one, you can be looking at these things as what can I make the most from it? Two, you can not get caught up in it, not worry about it. And three, be able to relax, not have sleepless nights because you're diversified into lots of different things. Now, guys, I really want to hear your thoughts on all of this. Please let me know in the comments what you're doing around this, what you're worried about, and how you're changing your investments based on the current situation. I'll make sure I reply to every single comment. And if you want to see content just like this, make sure you click that subscribe video. I'll be producing videos every week just like this.